Hello. Trading has closed on Friday, April 29th, 2022. We always start with our disclaimers, so let's do that. It's my trading plan for Monday, May 2, 2022. Remember, I can be completely wrong. Any trade you make should be at your own risk. Please tell your friends about the channel. Click like. I've had people ask me about my system. There's a book. You can get all the rules, either from an online bookseller like Amazon or from the publisher Harriman House. If you want the webinar, you can go to paypal.me/MEJT system. Okay, enough of that. We had some calls. We had this strong rally Thursday, if you can believe it. After today's action, it was all rally day. I said I thought the rally was over. At a target 42.74.53. Well, that's certainly printed. Look for the pattern with the early low. Typically, it has a late high and a drop in the middle of the day. That's what this is. Normally, it's a positive pattern. When it isn't positive, normally you get more weakness. Doesn't have to be immediately, but don't have to wait too long. So it's that if that's the only system you have, things don't look too good for Monday. We also have a higher MEJT target, 4187.44. And if we don't gap down, the rules call for that to print. Just remember, when you're having impulsive moves like that, that's one of the times these targets are less likely to print in their preferred time frame, even though they should print at some time. This is a review of what we said before. So we're going to break lower, not prevent it from happening now. I'd rather we consolidate it first, but doesn't mean we have to. Monday we have the pattern with the early low, and these are the patterns I'm calling for next week. We had an ultimate sell signal in the morning that turned out to be the understatement of the year. The afternoon actually had a buy signal, which did work. A buy signal in the MEJT system just means there is a higher target. We hit the higher target and there was resistance over it. The buy signal also means this drop shouldn't stick, and we should return to this line, 4187.44. And if we don't gap down smartly, that's the call for Monday. Just remember, when you're dropping like this, it might not work, but that's what the system says. Here's a daily chart. Here's the last TDST line. We're still in one bar under the line, so even though you could drop more, the mark's support area is one bar under this line, and we're still in his support area. Small consolation today if you were long, but that's what it said. Well, this yellow line is the 89-week moving average. It tends to separate bull markets from their counterparts, bear markets. We stopped right there. Doesn't mean it has to hold, but it's often support as well. Well, this is my variation on Edson Gould's stuff. You take this low and this high, draw a grid divided into eighths. Take a vertical line, connect the crossing point of that line to this low. You'll see you get pretty good support resistance areas, and once again you're at support. Doesn't mean support has to hold, but at least you're there. It's also important to note this was the biggest point move of the whole drop. Many times the biggest point move of a rally comes on the day of the top. Many times the biggest point move of a drop comes on the day of the low. I don't think the drop's over. But if we get it could have a bigger drop Monday in points. But at least you have another signal which might give a little hope to the bulls. Now we had a target of undercutting this line here by 362 points. We came awfully close today. It was over 320, I believe. Now this line keeps going up. Monday it'll be at 44.57 plus. So if we drop just under 4,100 cash, which isn't too far away, we'll satisfy the target. But that's not the mark's only target. If you connect these lines, the break over this TD line, which he calls it, was not sustainable in his work. According to him, at some point you're going to have to return to the line. And we did that today. So it doesn't mean this line has to hold, but it does mean that one of his targets was satisfied today. And even though it's a target and not a stop and reverse, many times it also acts as support. It doesn't have to. Well, we're counting in wave gray C down. I'm pretty confident that we've completed wave black 1. And the question is, do we complete wave black 2? Does this move down to wave black 3? Or is this A, we're making a red B, and there's one more move up? That's not the one I want. I think it's pretty unlikely we've completed wave gray C. It's just a question of have you completed the first leg. Let me rephrase that. It's a question of are you still in this consolidation or about to start another move down. Let's look at this move down today. Well, it's pretty easy to count it as a three-wave structure. You can count this as ABC, this can be ABC, and this can be 1, 2, 3, 4, 5 for a completed pattern. It's a bit harder to count it as an impulse because of this overlap. The only way I can do it is if that's 1 and that's 2, and then we have 1, 2, and we just completed 3, and 3 is a Fibonacci 1.618 times wave 1. It's not an impossible count, although it again argues for support right at today's low. If this is the right count, it's nowhere near completing wave black 3. You've got a few more waves to go, and you can't overlap wave 1, and that's not too far in front of us. So if this is the right count, there's a huge drop ahead of us. It certainly acted like a wave 3 of multiple degree, and so it's possible that we're just going to make a 4 and then collapse. Can't say it's impossible. That doesn't mean it's the right count. There still could be an ABC, one more move up. Well, Monday's pattern has the early low. It could still gap up. There's a higher MEJT target. Unless we gap down smartly, the rules call for it to print. Be aware during periods of sharp impulsive moves, targets are more likely to fail to print in their preferred time frames. Today's collapse nearly always carries over into Monday. And if that's what happens, the wave count I feel is most likely is compatible with a crash, ideally starting by gapping down sharply. Today's normally bullish pattern was bearish, and almost always this leads to lower prices fairly soon. But if, on the other hand, after a drop like this, if we gap up smartly, The elements are there for a very significant rally, but it should eventually give back all of its gains. Today's drop retraced to DeMarc's TD line, required by his work, but the longest bar of the drop often occurs in the final day. Sentiment is at record bearish levels. This is one of the reasons, the main reason, I'm not thinking we're going to crash. We might not. You don't usually crash when sentiment is at bearish levels, at record bearish levels, but that doesn't mean you won't. There's support from the 89-week moving average. There's a wall into the close. It's often followed by gapping up, although this is less successful over the weekend. I can't say a large gap at Monday's open is required, but I think it's likely, and the direction should tell us if we have a strong rebound or a crash. There's a real possibility of a crash, but the bears need to break support here. I've shown quite a lot of support levels. None of it's going to matter if we gap down at the open. But normally, when you drop down to support, like on the Friday, it's not the pros who are selling like this. And I can't rule out gapping up smartly and completing what I'm calling could-be wave 2. So I think the open is going to tell the story. We have much lower targets, but that doesn't mean we have to crash Monday. But if we start by crashing, I think it could be a very, very historic day. And that's today's call.